Good morning. Welcome to Trading Hour. It's a Friday morning. I'm Reema Tendulkar, with me Sonia Shenoy, and it's a strong start to this morning, but not as strong as what the early morning tick was. The Nifty high today was 24,400. Compared to that, we've given up about 150 points from the session highs. The Nifty is at 24,250, still up about 100 points. Sensex up close to about 350 points. And for the week, it's still mildly lower. In fact, the small cap index are down close to about 0.5% for this week. The CPSE index has taken a big knock, down 3% week to date. IT is the one which is batting for the bulls, not just today, but for the entire week. The Nifty IT index is a gain of over 1.5%, and this week it's up 3.5%. It's also a very strong handover that we got from the global markets. Even now, Nikkei is up 3%, Taiwan is up 2%. And by the way, I was just checking the kind of rebound Nikkei has seen. So Nikkei is up 7-8% this week. And now it's just down 3% from that 1st of August before that crash began.
Absolutely.
So quite a remarkable recovery.
It is, and not just for our own markets, right? I mean, if you look at what's been happening across the globe, it's been 6-7 days now that the US markets have been in the green as well. And you've had a very strong handover from the US market. So given the kind of inflation data that we got, given the kind of numbers that the US market has thrown up, it was just a matter of time before which you see, our own markets up and about. But having said that, so many stocks in focus. I think the stock of the day undoubtedly has to be Ola Electric. After the numbers, a new launch of the bike, the losses narrowing quarter on quarter. Ola Electric is now up almost 17%. And I'm sure nobody on the street really expected this kind of an up move for the stock today. So let's get straight to it then. The automotive sector is abuzz with a lot of noteworthy vehicle launches. Ola announced the company's foray into the electric motorcycle segment with the launch of the Roadster series. Ola Electric's bike portfolio under this range comprises of 3 models with prices starting from 75,000. Now, Ola founder Bhavish Agarwal says that they will have a good gross margin with motorcycles from the start and already have an installed capacity of 1 million units per year. Listen in.
Making bikes electric is a very important part of the electrification of India. The next frontier of electrification is bikes. And what we've announced today are 3 bikes, not just one, across a price band, like you mentioned, from 2.5 lakh rupees to 75,000 rupees.
Yeah.
So the Roadster Pro, the Roadster and the Roadster X.
Yeah.
Now, the important point to note for your viewers is that all these bikes will actually start from where the scooter supply chain and cost structures are already.
Yeah.
Right, because the entire platform is common.
Yeah.
And the suppliers are common, the supply chain is common. So we'll have a good gross margin from the starting point.
Okay, and it's not just Ola Electric with the new launch. M&M too has launched its most anticipated 5-door Thar, named Thar Rocks, yesterday on Independence Day, which will strengthen the company's position in the sport SUV market. Now, Thar Rocks has been launched in 6 variants in both petrol and diesel options. Its price starting from 12.99 lakh, going up to nearly 19 lakh. Now, the company expects Thar Rocks to lead the 12.5+ lakh category SUV segment in the next 3 to 5 years. Speaking to CNBC-TV18, Rajesh Jejurikar, MD and CEO of M&M's auto and farm business, say they think many customers will now prefer the new Thar model compared to their previous one. Listen in.
Of course, there will be some customers who are buying the Thar 3-door today who may want to buy and would want to buy this, and we are totally open to that as long as they stay within our portfolio. We don't mind if they buy Thar Rocks versus the 3-doors. Customers to choose, but there are different products. So that is for the more compact off-roader. This becomes more mainstream for going out with friends, families, even on a normal adventure trip, not necessarily off-roading. But there will be some cannibalization, and we totally are okay with that. We've set up a total capacity of 9,500, which has some reasonable amount of fungibility between how much we can make out of the 3-door and 5-door.
Finally, after such a long wait, the 5-door Thar has come out. And of course, the pricing is very attractive. That's something that the street definitely is looking forward to. But finally, the iconic British motorcycle brand BSA has officially been revived in India with the launch of the all-new Gold Star 650 starting at 2.99 lakhs. This launch marks the entry of the iconic British motorcycle brand. New modern retro motorcycle assembled in India and available in 5 distinct color variants. The BSA Gold Star 650 goes head-to-head with Royal Enfield's Interceptor in this category. Classic Legends, a subsidiary of the Mahindra Group, had acquired the rights from the British custodian David Bennett. Anupam Thareja, the co-founder of Classic Legends, spoke with CNBC-TV18's Rachna Dhanrajani. Listen into what he had to say on the new launch.
I think the beauty of this is that we have really put our heart behind making sure a single gives what a biker needs. You can make a bike with a lot of gizmos and a lot of lights and batteries and electronics, but sometimes you make things simple. So leave the creativity to the rider, right? So it is a bike made for riders. It's a bike where we believe will get motorcycling up, will get riders back into this category. It's a very powerful machine. It's got the highest torque in its category.
Okay, let's get into a short break on that note. We'll come back with more on the market. Stay tuned.
Welcome back to Trading Hour on CNBC TV18, where lots of stocks in focus. The market is also doing pretty well. Trent, by the way, continues to hit fresh highs. So if you're wondering if that one has stalled, no, it hasn't. 6488 on Trent, 6,488 now, which is almost more than double this year. So this has been one of the strongest stocks that we've seen in 2024 already. And a couple of other names do stand out. There's Gabriel India, which is at a fresh high today. There's Colgate, which is sitting at a fresh high as well. Something like an Eris Life Sciences at a fresh 52-week high. So lots of individual stocks. Of course, Ola is your big mover. So that one continues to be up a circuit, up almost 20%. But DLF has gained on the back of positive brokerage commentaries. Sonal is joining in with the details. Sonal, over to you.
Thank you for that. Well, JP Morgan, they've gone ahead and increased the target price on the stock to 1,000 rupees, and they have an overweight rating. They're quite sanguine on the cash flows and the balance sheet improvement that the company has been seeing of late. They believe that DLF will surpass the coveted $1 billion operating cash flow at group level in FY25. Now, do remember, higher debt was one of the big problems that the company was facing, and now they've actually been able to reverse that and convert it into operating cash flows. This is due to a strong sales cycle and compounding of free cash at its rental business as well. So that part of the business is contributing to stronger balance sheet. This opens up a significant strategic flexibility at group level on acquisitions that JP Morgan thinks company can go ahead and make right now. They see upside to pre-sales, margins and cash flows in FY25. Remember, Q1 was strong in terms of cash flows. They saw 100% growth on a YOY basis. They've already achieved 38% of their FY25 guidance, and that is something that makes JP Morgan very positive on the stock.
Thank you very much for that. Hindustan Zinc is under pressure after promoter Vedanta has increased the size of its offer for sale to 13.37 crore shares versus 11 crore shares earlier. Nigel joins in with the analysis. Nigel.
Well, that's right. After very, very long, there's positive action coming in from the promoter entity of Vedanta Limited. Let's run you through the news. Remember, on Thursday, we were reacting to news that Vedanta is looking to sell close to 11 crore shares in Hindustan Zinc. Now, it seems demand is fairly good because they've upsized this to around 13.4 crore shares. Well, the pricing is at a 15% discount because the float in Hindustan Zinc is very, very limited. To give you a number, well, the stock trades at around 13 to 14 times EV upon EBITDA. So with this 15% discount, now it's more digestible at around 10 times EV upon EBITDA. What does Vedanta get? At the base price, close to 6,500 crore rupees. They can either repay debt, use it for capex, or even pay out dividend. Talking about dividend, Hindustan Zinc, well, they'll be having a board meeting on the 20th of August, and they'll be looking to pay out some dividend. Every 100 rupees that comes out from Hindustan Zinc, Vedanta Limited gets 65 rupees of that. So positive news flow for Vedanta. For Hindustan Zinc, because of the discount, the stock is down. Back to you.
Okay, thanks a lot for that. So that is on Hindustan Zinc and Vedanta. But IT stocks are moving with quite a bit of strength this morning rather. Most IT stocks are up almost about 2-3% and getting better. And since we're talking about stocks that are doing well, stocks that are at 52-week highs, Suprajit Engineering is another one that's at a fresh 52-week high this morning. Balrampur Chini, Polyplex, Time Technoplast, Gabriel India, Uflex, Trent, Keynes Technology, Strides Pharma, stocks that are all at fresh 52-week high. And some of these stocks like Keynes and Strides Pharma have actually doubled this year. So given the kind of traction that we've had in the broader markets, it's really been phenomenal. The moves. MCX is at a fresh 52-week high as well. It's a 40% gain that MCX has seen this year already. So very, very strong traction coming in over there. A couple of other names, Info Edge, fresh 52-week high over there, Colgate, Eris Life Sciences, and some of the other names looking pretty good too. What's dragging its feet on the index today is something like an HDFC Life. Hero MotoCorp is down about 0.7%. Maruti Suzuki, SBI Life. Autos are coming in for some profit taking today. No two ways about that. And well, something like an NTPC, JSW Steel are also under a bit of pressure. Let's take a short break. We'll be joined by the management of MPS to discuss more about their numbers and the way forward.
Welcome back. Global investor and author Ruchi Sharma feels that India is the last bull market of the world that is still raging. Speaking at the CNBC-TV18 town hall, he lauded the strength of the Indian market. Listen in.
Let's talk about the markets, because one thing that has taken everybody by surprise is the resilience of the Indian stock market. I mean, we've gone through an election result that didn't pan out the way that the markets anticipated them to do. We've gone through budgets. We've gone through all kinds of other issues. And the market has just gone one way, and that's up. What do you make of the resilience of the Indian market?
It's baffling, really, because, as I said, that it's a very domestic story. I mean, it's not been driven by foreign investors piling into this country or in any way. It's all domestic. So, you know, the financialization that's happened out here, I think, is staggering in terms of...
Yeah, banks are now talking about the fact that they're struggling to get deposits because everybody is going to mutual funds.
Yeah, so I think that this has been one of those incredible financialization stories that's taken place. In fact, it's very, very telling. I can observe it because even I don't know what's the framework to use here as to where to call an end to this, right? Because it's already the most expensive market in the world. In terms of, it's already, in terms of, there's the returns over the last 5 years of this market in dollar terms have even exceeded the US in terms of what, what it's done. There really has been no bull market in the world this decade like India. This is a unique bull market unto itself, because also of the breadth of it.
Yeah.
Like in the US, you've had a bull market
largely driven by tech.
Concentrated by tech and a few companies at the top. In India's case, it's been extremely broad, like in terms of what's happened. You know, there are various sectors that have, virtually every sector has participated in this bull market. So it's a very unique bull market that we have seen in India. It's the like only bull market in the world, I would say today, literally, the true bull market. The US has, started to show some cracks and very lopsided. So I think it's a fascinating story to observe. It's the last bull market in the world standing, if not the only bull market of this decade.
And valuations clearly don't matter.
Valuations don't matter, but I've seen markets like this that at times we just have to suspend reality, like Japan in the 1980s. Like people kept calling in the mid-1980s, there was so much talk of Japan being overvalued and stuff, and yet from there it doubled in like value. So, that's all I can believe, that you can use models to look at markets in a conventional way, but sometimes when those models aren't working, you suspend reality and then you sort of observe to see as to when it observes. Now, of course, as investors, we just have to, we have to be very vigilant because of the fact that these momentum markets can also turn on a dime, which is that something will happen and all of a sudden it'll turn on a dime.
My point is, like, go back to the budget, and everyone said, oh, you've got the long-term capital gains coming in this time around, and that's going to take down the markets. And guess what? It didn't. And, the markets have gone up another couple of thousand points post that.
Yeah. So as I said, that it's very difficult, when the conventional models aren't working in terms of that, because at the beginning of the year, had you said that this will be the political outcome, and this is, in terms of, these are the couple of other things which will happen. You mentioned budget, whatever. Most people would have said that the market will be down 10, 15%. Instead, it's up that much, there. So I'd say that in terms of there. But yeah, this though is also leading to its own consequences. I mean, one thing which I find very fascinating in India now is that no country has created as many billionaires as India has created this decade, right? In terms of, it's just a staggering number. The billionaire wealth in India now as a share of the overall economy today is 26%, higher than America. There's virtually no major country in the world in this zip code now. You have some small countries with small markets, like a Sweden or something like that, which may, but there is no country in the world. So this billionaire wealth creation that's happened in India, again, it's very broad, right? In terms of we focus on what's happening amongst the top, etc. It's been very broad, even in sectors like manufacturing, which have stagnated otherwise. The value creation has been such that the maximum number of new billionaires created in India this decade have in fact been in the manufacturing sector. like it's a staggering disconnect between what's happening in manufacturing, in the economy, and what's happening in the market. So the market's in a totally different zip code. It's doing its own thing. But yeah, in terms of, I observe some of the excesses also. The fact that India now, the billionaire wealth as a share of the economy today.
Is it 26%?
Exactly, is about the largest in the world of any major nation. I mean, that's really like a statement. I first came up, if you remember, in Breakout Nations with this concept of a billionaire index.
Yeah.
At that point in time, it was jarring to me that billionaire wealth in India as a share of its economy had crossed 10%. And here we are, like more than a decade later, at 26% in terms of billionaire wealth as a share of the economy. So, and we have more than 200 billionaires now, I think, like in this nation. So even in terms of numbers now, it's only US or China, etc., which may be larger with economies that are multiple times our size.
Staying with the India story, what do you believe is the hidden superpower that we don't know of in the India story?
No, like in terms of, I'd say that the part I'd like to see more of in India is that, and I keep saying this to India, that even in the West, I said this even during the elections and stuff like that there's so much focus on the center. It's Delhi, so much talk about just Modi and stuff like that. I'd say that in India, and as you know, we travel a lot, see India, what inspires me the maximum about India is our federalism. The fact that, we have so many states which do their own thing. And I'd say that the real big potential kicker for India for here is if we move even to a more competitive federalism kind of system. Like I would like to see that. Less centralization, more competitive federalism.
Okay, those are... that's a very important conversation between Ruchi Sharma and Shireen Bhan at the town hall. And you'll, of course, hear the excerpts of that through the course of the day. But let's take a short break. On the other side of the break, market fundamentals with Anuj Nayar from PGIM India Mutual Fund. Stay tuned. Welcome back. Well, Anuj Nayar from PGIM India Mutual Fund joins us now to discuss the market fundamentals, his top sectoral picks and the way forward. Anuj, thanks a lot for joining in. This has been a market that has been so resilient over the last many weeks and months and continues to be so despite what we are seeing across the globe. What do you think is the trajectory of the market now? Are we staring at a time-wise consolidation that this market could see, or is there some sort of a correction coming price-wise?
So, good morning and thank you for having me here. We believe, market returns are a combination of your earnings growth and where the valuations are. Earnings growth seems to be, pretty subdued. This quarter, the earnings hasn't been anything great. And the next quarter also, our belief is the earnings are going to, they could continue to remain pretty subdued in that sense. So the markets will, if not go through a price correction, will probably go through a certain amount of time correction. The valuation expansion which is happening is purely based on liquidity. And that just makes us a little bit of a little bit cautious in the near term.
Ola Electric, another 20% upper circuit on that. It started strong post the numbers and the new EV motorcycle launch, and now it's locked in an upper circuit of 20%. Take a look at even Brainbees, the company behind First Cry. That's up another 6%. Paytm is, upper circuit of about 5%. So these new age tech platform companies have gathered so much interest. Anirudh, have you analyzed, say, Ola Electric when it launched? What were your thoughts? Did you participate in it? And in this entire basket, which ones would you prefer?
So without naming anything specifically, we've looked at all of them. We believe there is a long runway for many of these companies actually. But company specific, whether it is electric EV, the electric vehicles coming through or certain other areas, our focus has always been on companies where we see certain amount of cash flows coming through. And once that happens, we usually stay away from the IPO listings. We give it about 2 quarters before taking a better view on that from a longer term perspective. So some of them will do definitely very well over a period of time. Our only sense is with a 6 months lag post listing, we will start having a look at them. there are some very interesting, new age technology companies which are generating cash flows, and we do have exposure to some of those companies out there.
Okay. So when you say companies, new age technology companies generating cash flows, is it fair to assume that you are staying away from the companies that are growing on the top line but are still net loss making? I mean, is that a good way to interpret this?
Yes, it's a very fair assumption. Our belief is, pushing top line is the easiest thing to do. Finally, it has to boil down to profitability and cash flows. And something that we've been following at in-house is, top line is vanity, bottom line sanity, finally cash flows are reality. And especially in these high valuations, we would want to stick to businesses where top line is getting finally converted to profitability and cash flows.
Nifty IT, that's the one which has led the up move this week with a 4% up move. Well, the earnings were fine, perhaps signaling that we're at the worst, or perhaps it's very close and soon things may be on the mend. But it's not that we're seeing a V-shaped recovery. So are you surprised by the up move that we've seen in IT over the last 2 months?
So IT has actually, from a valuation perspective, has been reasonable. It has got the cash flows to that extent. When the markets have moved up, it has actually been a laggard. Earnings have been reasonably good, more company specific. But I think the worst probably in IT is over. If someone takes the next 2 quarters to 3 quarters, this probably will give you not only safety on the downside, but will also provide you with a certain amount of returns coming through. And this is a sector where we find value across market capitalization. So to that extent, we like this sector and continue to probably buy into the dips.
Okay. What do you do with some of these sectors like, say, an auto? We've discussed Ola because that is really the one that is in the news right now. But in general, autos are, it's sort of a hit and miss right now because there is a slowdown in certain pockets like passenger vehicles. Two-wheelers are not doing that great. There is a big EV adoption that's taking place. So what does one do with these traditional IC engine auto stocks?
So our sense, Sonia, is, the conventional ICE engine companies, they have still a very long way to go. I think EV per se, we'll have to wait and see what is the final form of it. Are we going through a transition where lithium is the right, raw material for the batteries, or is it going to evolve into sodium, hydrogen, etc.? Presently, over the next probably half a decade, I think hybrid will be the technology which will be more adoptable, which has got no issues with regards to raw material availability. And as a technology, it's a clean technology. So anyone who has been able to, in the auto and auto-end space, who's been able to, migrate from pure ICE to hybrid, that would be something that we would be really excited about. We believe there is enough and more of scope within the ICE engine companies also. Also the fact that there are hybrids companies both in the OEMs as well as auto-ands. There are companies available which have got exposure to hybrids, and that is a space where we would be excited about. We like the two-wheeler space, the passenger vehicle also to a certain extent. Where we are a little cautious is the CV cycle.
Okay, thank you very much, Anirudh, for joining in. We'll slip into a very short break. On the other side, we'll get a corporate conversation going. We'll invite the management of MPS to discuss their Q1 numbers and the way forward. Welcome back. Let's get a corporate conversation going. MPS is gaining after reporting a strong revenue growth in the first quarter. The company's top line went up by 36% on a year-on-year basis. That said, the margins came under pressure, down to 22.7%, and profits declined 15%. We have with us the management of MPS now joining in. Thank you very much for joining in, Rahul. The first question is on the top line. Now, you've delivered a 36-37% top line growth, but it's been aided by 2 acquisitions that you've done. Can you share what the organic revenue growth is for the current quarter and for the full year? What can you guide in terms of consolidated revenue and the organic revenue?
Thank you for having us, Reema, and happy Friday. So, yes, as you rightly pointed out, Q1, we do see a lot of contribution from both AJE and Liberate Learning, acquisitions that we did last financial year. Overall, we're expecting, 10-12% organic growth across our content business, 7-8% growth in our platform business, and north of 12% organic growth in our e-learning business. So consolidated, we'll see something like 10% organic growth. Over and above that, of course, we have the 2 acquisitions that we've already done, and we are planning an additional acquisition at the end of the year.
Okay. Rahul, hi, good afternoon, and thanks for joining in. Good morning, rather. You have projected a 25% revenue growth for the full year for FY25. Are you on track to doing that? And what is it? What are the triggers that are going to help you get there?
Yeah, so I think the 25% is not just the revenue growth, but earnings growth. We're expecting a sharp recovery on margins in Q2 itself. We are halfway into Q2, so we have good visibility. So overall, expecting about 30% revenue growth and north of 25% EBITDA growth in the year. In terms of what's really leading to that, of course, is 40% of our growth is coming from organic growth, as I pointed out, and the balance is coming from on the inorganic side. What we're seeing in the marketplace is slowly MPS, as our scale is increasing, we are getting access to many more opportunities that we would typically not get. As the supply chain is consolidating and our customers are looking to work with scale partners, particularly after the pandemic when the supply chain was tested.
Can you explain the margin drop to us, Rahul? I think this quarter your EBITDA margins came in at 22.7%, which compares with over 31% a year ago. And even on a quarter-on-quarter basis, we've seen a margin drop.
So a couple of reasons. Firstly, on the e-learning side of our business, we are digitally working to improve the margin profile. So we started a couple of initiatives last year, which included more automation and AI approach in the development that we do. Additionally, we started embracing outsourcing and gig workers. As a result, for the last 6 months, we've had duplicated effort as we look for the workflow and the operating model to settle in. As you'll see at the end of the quarter, our headcount has taken a significant reduction in the e-learning business. And again, we're expecting a sharp recovery in the e-learning margin profile in Q2 itself. The second aspect is, of course, as I've shared previously, the acquisition of AJE was a loss-making asset. In Q1 alone, we've eliminated over $5 million of costs in wage costs itself, and again expecting a strong recovery. So it's largely got to do with an investment to improve the e-learning margin profile in the long term, and the acquisition of AJE, which has dragged the EBITDA margin in the short term, but we are very bullish about what that margin profile looks like from Q2 onward, and as well as at the end of the year.
Got that. And just to confirm, you spoke about a 30% revenue growth for the full year on a consolidated basis and 25% earnings growth, EPS growth, right?
Yes, that is correct.
Okay. You also right now just said that you're expecting a sharp recovery in the e-learning business. I think currently the e-learning business margins are 8.5%. What are the steady state margins for e-learning once all these investments, you move on to these gig workers, etc., comes into place?
So we're expecting to get to, in FY25, north of 25%, and north of 30% for the next financial year. So at a consolidated e-learning level, we feel comfortable to project over 25% EBITDA margins for FY25.
And you have this Vision 2027 plan too. 2027, which means FY28. I think that projects 30% margins for you on a consolidated basis. What is the top line likely to be?
So again, we are aiming for north of 1,500 crores in revenue. FY25 for us is an inflection point. The management team and everyone is gunning to make sure that we hit the halfway mark in FY25 from an earnings perspective. So overall, FY28, the goal is to get to 1,500 crores at similar margins in revenue. And this year, we want to get to the halfway mark.
Okay, all right. We'll let you go on that note. Rahul, thanks a lot for joining in and all the best for the quarters to come. Well, that's the word coming in from MPS. They have a very strong projection for FY25. They expect organic revenue growth of 10 to 12%. And, the trajectory is looking good. Let's step into a quick break. When we return, we'll discuss market technicals with Mitesh Thakkar. Also discuss their top trading bets for the day. Stay tuned. Well, still steady state for the market. Mitesh Thakkar is joining in for a quick technical check. Mitesh, hi, good morning. Do you think the market can build on to its gains from here? What's the way forward? And what are we looking at in terms of individual stocks? I think you're on mute, Mitesh.
Audible now?
Yes, go ahead.
Okay. So my understanding is that the market isn't weak, but it's very clearly not showing signs of an upward move. And hence, I think, there's some kind of tussle going on. I think IT as a pack would do well, while the rest of the market, PSUs and banks, look slightly on the weaker side. So I think that trend could play out. Though the bank Nifty is strongly up today, but the overall structure hasn't turned very positive. So I think I would still bet on IT stocks and have recommendations there. In fact, Infosys is a buy with a stop at about 1820 and a target of 1900 plus can be looked at over here. We had a buy on HCL Tech earlier. Now I think, LTPS can be looked at. That's given a very strong present volume breakout. So buy here with a stop at 5130 and a target of 5320 can be looked at.
By the way, banks are pulling their weight now. The Nifty Bank is almost back to the day's high that it hit in the morning. And from the day's low, it's been a recovery of 450 points on the Nifty Bank. Pull up an ICICI Bank, 2% gain on that. Kotak Mahindra Bank also inching up quite a bit. Mitesh, thank you very much for joining in. By the way, in the pharma space, Glenmark Pharma is also up close to about 5%. They had that conference call in the morning where the company spoke about how H2 is going to be better than H1, particularly for the US markets. US is about 24% of their sales, and the cash in the books is also 350 crore rupees, with margins the company is guiding for is about 19%. So Glenmark Pharma has also moved up. Aurobindo Pharma, on the other hand, is under pressure. There is some regulatory overhang on it. They've got a warning letter from the US FDA for its Eugia Unit 3. Ekta joins in with the details. Ekta.
Well, yes, Aurobindo is in focus because their Eugia Unit 3 has received a warning letter from the US drug regulator. Now, this particular unit, which manufactures formulations, is a part of their Eugia business, which basically houses the specialty business. Now, it was inspected in Jan 22nd of this year to Feb 2nd to be specific, and was issued 9 observations at that point in time. The unit was then eventually classified as an official action indicated status, which increases the risk of regulatory action by the US FDA in May of 2024. Now, by way of caution, the company had already stopped manufacturing it at Eugia Unit 3 post the inspection which had taken place in Feb. The company has been incurring remediation costs. For example, it incurred remediation costs in Q4, it spilled over in Q1, and they believe that it had reduced to as much as around $2 million versus $7 million earlier estimated in Q2. Now, the company, as per our interaction post the Q1 numbers, indicated that they have finished the corrective and preventive action when it comes to remediation for Unit 3, and it was speculative to say when the US FDA could come and re-inspect the facility. Now, analysts have indicated that at least around 20 plus ANDAs could be impacted because of that official action indicated status, which was issued all the way back in May of 2024. So that impact is likely to continue. One will also have to see whether there could be any incremental remediation that the company will have to undertake. Now, separately, remember that there was an other OAI which was issued to the company's Unit 2 just earlier this month, but the revenue contribution is limited at around 1%. So the street is going to have to see various factors. For example, how much will Unit 3 contribute going forward, considering there is a warning letter, and the larger picture of regulatory concern, considering that Unit 2 is also under the regulatory scanner. The company had stuck to their guidance of doing sales of around $600 million from Eugia in FY25 as a whole, and whether or not they can manage to stick to that guidance as well.
Okay, well, thanks a lot, Ekta, for that. I just wanted to, before we end the show, wanted to just talk about some stocks and the market and the way it's doing. Brigade Enterprises is in focus, some news flow coming in over there, but the stock of the moment undoubtedly is Mahindra & Mahindra. It's moving closer to the high point of trade, 2.5% higher. The new Thar ROXX has been received very well. First, because of how attractive the pricing is, the starting price at a little under 13 lakh rupees. And the second is how it is getting into this SUV space in a big way. It's already the #1 player by market share. And it is, the new Thar looks fabulous. It's a 5-door Thar, and it's come after a long wait of around, 4 or 5 years, finally in the market now. So the product is very well received. Brokerages are giving it a thumbs up. In any case, the stock is up about 70% in the last 1 year. So it's been piling on the weight. And now in this fast-growing SUV segment, its latest launch has been very, very well received. So that's one of the big movers today.
Nomura in the note says that we appreciate the consistency with which M&M has come out with successful launches. With every single launch, even the facelift and the variants show a lot of effort being put in to innovate and further improve the product appeal and raise the bar. So big thumbs up from the brokerages, and don't take your eye off the mid-cap IT screen. They're on fire, the individual stocks over there, whether it's Zensar or FirstSource, L&T Technology Services, Emphasis. These are all up more than 5% in today's trading session. Well, with that, it's a wrap on Trading Hour from the entire team. Thank you for watching. Don't go anywhere. Halftime report is up next.